Hey everybody, it's John King with Summit Funding, and it is Friday, the 23rd of June. Thank you for joining me this week and every week for my weekly market update. So there's a lot going on, but none of it's very new. So I'm going to be real succinct in today's update. We're seeing a lot of volatility in interest rates, and it's not really changing. Now, John, what the heck are you talking about? Volatility means it's changing, and yet you're saying it's not really changing. The reasons for rates to be where they are right now ultimately comes down to where the economy is heading and what the Federal Reserve is going to do about it. And that's been the story for the last year and a half, and it continues to be the story. The problem is the story is shifting a little bit. And the expectation was when the Fed drove interest rates up, that was going to cause us to jump right into a recession. And it just hasn't happened. We're not seeing all of the recessionary indicators that we expected. And as a matter of fact, inflation is being more stubborn than we would have liked. Now, I think inflation is going to continue to come down, but the Federal Reserve is rattling their saber, and they're very worried, or at least they're telling us they're worried that we're nowhere near out of the woods. Now, you heard me say a lot about the Fed has to make sure we don't, A, expect inflation to continue, because that's bad. And B, they have to make sure that we don't think inflation is solved before it really is solved. And so it's a very, very fine line that the Fed is walking. And one can argue, I've argued, that the Fed is going to act like the parents that are driving in the car already on your way to Disneyland saying, kids, if you're not good, I'm going to turn this car around and we're going back home. All well knowing they're not going back home. They're going to Disneyland. They've made the plans. They've got the ticket spot. We're not wasting this money. But you got to tell the kids that if they're not good, you don't get to go to Disneyland because you're trying to get them to act a certain way. And I think that's what's happening right now. The Fed, Jerome Powell, the head of the Federal Reserve, met with Congress this week and talked a lot about what's going on and tried to give some insight into what they discussed at their meeting a week before when they paused, or what they said temporarily paused, the interest rate increase. As a matter of fact, the words he used was, we're skipping an increase this month. In other words, we're still planning on increasing, and we're going to increase a lot more. How much is a lot? I don't know. But they called it a skip instead of a pause, because a pause implies, hey, we've paused. A skip says, nope, we're on track. We're just skipping this particular month. And that's raising a lot of concern, especially when you see what's happening in the global economy. You're seeing England, who had a 0.5% increase in interest rates on Wednesday as an emergency. Like, as an emergency, the United States Federal Reserve is saying, hey, we're skipping this time, but England is having an emergency 0.5% increase. Turkey almost doubled their interest rates this week, literally because they are super concerned about the economy and the markets, and they are really doing a complete change in how they're approaching things. That volatility trickles down. The stock market, the bond market, the mortgage market it's a global market now. It's not simply a matter of what's the United States doing, but information moves so quickly that it's creating a lot of volatility. So where are rates going? I do believe that rates are going to be lower. This is a cycle, but I don't think they're going to be lower as quick as we had hoped. And I think we're going to be stuck in this range, this 5.75 to 7.25 range. I think that's our range for a while. I think we might be in that range for another year before we start pushing down below 5.75. I hope that I'm wrong. I hope that we see interest rates move down faster. But here's what I'm seeing. I'm seeing buyers accepting that that's where rates are. I'm seeing buyers that have waited on the sidelines for the last year, expecting to see prices drop, and they haven't. Expecting to see interest rates come down, and they haven't. And they're kind of saying, you know what, I'm done waiting. I talked to a client the other day who listed his house and sold it a year ago, expecting that he was going to be able to buy again and take advantage of a drop in the market. And it hasn't happened. The market hasn't dropped. And I've explained all of the reasons. You can check out my history on my YouTube channel and see why I think housing prices are going to stay strong. But what I'm seeing right now is a shift in buyer mentality, in the thinking that something's going to get better tomorrow. Well, tomorrow never came. Today is tomorrow. And rates haven't gotten better, and house prices haven't gotten cheaper. And it really is telling to me that things are going to get more expensive if you wait. And so if you're in a position that you're not sure what to do, or you're advising people unsure of what to do, my advice is simple. If you can afford the payment today, and that's the key, not if you're comfortable with the payment. Nobody's comfortable with a house payment at a 6.5% or 7% interest rate. But if you can afford it, if you can afford the payment today, buy the house, because it is going to be less expensive to own that house down the road when interest rates come down. The unknown is, when are rates coming down? So if you're in that position, my advice, find a house that you can afford the payments and buy it. Things are not getting better, and buyers are recognizing that, and we're seeing more and more buyer activity, and we're still not seeing more homes on the market. So I feel like we're going to see upward pressure on on house prices simply because of that additional buyer activity. Hope that you enjoyed this short update this week. I look forward to being your lender. I'm interviewing for that. So to be perfectly clear, I do these videos to keep you updated, to help you understand what's going on in the market, and to help you recognize who you can trust when you're looking for somebody to guide you through the mortgage process. I am interviewing for that right now, and I would love the opportunity to take great care of you and those you love. Thanks so much. I hope you have a wonderful weekend, and we'll talk to you soon. Bye-bye.